Noir Plasma Chrome Bleed. Unlocking knowledge, inspiring innovation, empowering curious minds.
This website makes learning so easy. I found all my resources here.
Like what you share.
Welcome everyone. In today's explainer, we're going to explore exactly how the newly restructured CA final curriculum bridges the gap between strict statutory execution and advanced doctoral research. Essentially, we are looking at that fascinating intersection where the rigid black and white rules of accounting crash right into the messy, unpredictable reality of human behavior.
Here is our roadmap for today. We'll start by bridging practice and theory, move into finance and financial reporting, solve the audit quality equation, navigate the tax labyrinth, look at integrated business solutions, and finally reach the epistemological horizon.
Section 1. Bridging Practice and Theory, the Matrix of Global Finance.
So let's dive into the core dynamic we'll be exploring today. On one side of the coin, you have professional training. This drills deep into statutory compliance, doing the math, ticking the boxes, and following the letter of the law. But on the other side, advanced PhD research takes a huge step back. It interrogates the underlying economic motivations, the behavioral biases, and the systemic market impacts that those very rules actually create in the real world.
Moving on to Section 2, Finance and Financial Reporting, Papers 1 and 2.
Now you might be wondering, how do doctoral researchers actually view financial reporting? Well, they don't just take a fair value measurement at face value. Instead, they use complex econometric equations, like the Olson valuation framework, to test if those accounting numbers actually translate to real-world market value. Even more fascinating, they use the modified Jones model to actively hunt for corporate manipulation.
Okay, I know. Don't let the math scare you. When researchers map variables like total accruals and gross fixed assets against standard revenue reporting, they are looking for a tiny residual marker called epsilon. That is essentially the mathematical hiding spot. It's exactly where researchers catch executives artificially discounting prices or slashing R&D just to hit short-term targets, all while silently destroying long-term enterprise value.
This gap becomes even more obvious in advanced financial management. A working professional might rely on the classic Black-Scholes formula, which, let's be honest, assumes the market's volatility is constant and somewhat predictable. But researchers, they know the market is absolutely chaotic, so they use stochastic models like the Heston model to price in extreme tail risks, along with real options analysis to figure out a manager's actual flexibility to pivot when the economy unexpectedly shifts.
Section 3. The Audit Quality Equation. Paper 3. Assurance and Ethics.
While a professional auditor rigorously executes standard rules like SA 320 for materiality or SA 240 to catch fraud, academic researchers take a totally different approach. They want to quantify the actual empirical quality of that audit using a highly specific economic specification. Essentially, they build an audit quality equation.
So, what actually drives that audit quality? Researchers firmly grounded in principal agent theory are asking a very uncomfortable question here. Do economic dependencies secretly compromise an auditor's objectivity? They dig into the ratio of non-audit consulting fees to audit fees, auditor tenure, and even the office size, just to see if financial incentives are quietly distorting professional judgment.
This leads to a truly fascinating statutory debate. What seems like a perfect protective rule, like mandating that a company must rotate its audit firm every few years to prevent them from getting too cozy, is heavily debated by academics. They question if, by forcing that rotation, we are accidentally sacrificing vital, hard-earned client knowledge purely for the sake of perceived independence. It's a real trade-off.
Section 4. Navigating the Tax Labyrinth, Papers 4 and 5, covering direct and indirect taxes.
To demystify one of the single biggest shifts in global finance right now, the OECD Pillar 2 Global Minimum Tax Framework. Just look at this sequence of events. Multinational enterprises with massive revenues have to calculate their effective tax rate in every single jurisdiction they operate in. If that rate drops below 15%, bam, an aggressive top-up tax is triggered to bridge the gap. It's a mechanism explicitly designed to wipe out corporate tax havens once and for all. But of course, how do companies try to dodge these global frameworks? Doctoral literature relies heavily on the Heinz-Rice panel specification. It's a mathematical model used by economists to track exactly how and why corporate profits miraculously migrate across borders to warmer, friendlier tax climates. When you translate all those mathematical variables, specifically looking at the tax rate differential across borders versus actual capital and labor inputs, you start to see a company's true intent. Researchers use this to test whether compliance rules actually deter profit shifting or if they just force multinational firms to pay a fleet of lawyers to find completely new legal loopholes.
We see this exact same tension in indirect tax. While tax practitioners are focused entirely on procedural compliance, like managing GST and unblocking input tax credits, economists use gravity models of international trade to look at the macro picture. They study how these tariffs actually distort global supply chains, alter consumer prices, and impact local economies on a massive scale.
Section 5. Integrated Business Solutions, Paper 6, Multidisciplinary Frameworks.
In this open book, multidisciplinary assessment, it's no longer enough for a candidate to just know one isolated rule. They have to assess a complex commercial scenario comprehensively. For example, if a company makes a cross-border acquisition, the candidate must simultaneously determine how it impacts asset recognition under INDAS 103, calculate the transfer pricing implications, and adjust the cost of capital. They have to do all of that at the exact same time.
The contrast here is stunning. To navigate these interdisciplinary conflicts, professionals rely on case studies, but academics, they take it a step further using system dynamics modeling. They map out the dynamic feedback loops between these departments. They want to know, for instance, if aggressive tax planning, optimized by the tax department, might actually erode a company's financial reporting credibility and market value over the long term.
Section 6. The Epistemological Horizon, Strategic Synthesis.
Ultimately, synthesizing this applied CA final syllabus with advanced PhD paradigms does something pretty remarkable. Connecting professional practice with academic inquiry advances the entire field of financial reporting. It transforms accounting from a descriptive, backward-looking task into a vibrant, predictive discipline that actively shapes global markets.
So as we wrap up this explainer, I want to leave you with a final thought to ponder. When you look at a balance sheet, an audit report, or a complex tax code, are you just seeing the rigid statutory rules? Or are you finally seeing the underlying human behavior, the incentives, and the economic variables that actually drive the entire global economic machine? Thank you so much for exploring this with me, and keep questioning the numbers.
Like what you shared.
This website makes learning so easy. I found all my resources here.
Noir Plasma Chrome Bleed. Unlocking knowledge, inspiring innovation, empowering curious minds.